cameras off, and if you have questions, we'll just save them for the end. So thank you for joining the She is Hope LA Fall 2022 She Is series with the lovely Angela Bessard, one of our regular speakers. She's going to talk about how to navigate the credit system with success. So go ahead and I'll let you take it away.
All right. I see we have a message. Let's see. What is the Zoom call about? Oh, well, I'm glad that you asked, Catherine. So we're going to be talking about all things credit, and we're going to be talking about the credit score, what you need to do to monitor your credit. And just so you guys know, I know that I'm looking in the camera right now, but we do have some people here, so I'll be looking at them as well. If you have any questions, I'm going to be looking, I'm going to be sharing my screen, by the way. I should probably do that right now. Share my screen and then go over here. So if you have any questions, just go ahead and pop them. Hey, just go ahead and pop them in the chat. And I may not see them right away, just so you know, but I will get to them as we go. Hi, how are you? I'm doing good. So we're just going to put this over here. All right. All right. So again, my name is Angela Bessard, and it's very nice to meet all of you guys here in the boutique and those of you that are online. I love what I do simply because I get an opportunity to help people change their perspective on money and on how their credit is an investment tool to build wealth. And a lot of people don't really believe that, but it is the truth. We live in this great country, the United States of America, that has given us an opportunity to do a lot of things. And I think what happens is because of our misunderstanding how the system works and not having a proper or formal education about how it can work for us, we make a lot of mistakes. And thankfully, recently, they are starting to put this kind of stuff in schools. I'm actually going to be teaching at some private schools here next year. And I'm super excited about it because I think that it's so important for our younger generation to know and understand what the credit system was developed for, because we have become a society of what I call the click society. And what I mean by that is we click, click, click. You know, you have apps on your phone, you have your bank on your phone. You know, I tell this story all the time about how I had a coffee app on my phone. And one day my bookkeeper comes into me and she says, "Who spent $420 at Coffee Bean?" And I was like, did I spend that much money at Coffee Bean? And, you know, for me, it was just like every day I would go in and I'd buy my whole staff coffee before I'd go to the office. And I wasn't thinking, just clicking the button, but it's constantly charging my credit card. So think about it. If I was a younger person that really didn't care, I was spending my parents' money or whatnot, you know, you can spend so much money without knowing what you're doing. And I think that what I like to do is teach and train people to pay attention, but moreover, to have a vision of how their credit can be a tool, how they can use it, and how it can benefit them in their life. And so that's what we're going to be talking about today. If I can go to the next slide, what is the problem here? Okay. So there's 4 different things that I really want to talk about and focus on today. And number 1 is what I just said, your credit is an investment tool. Now, what do I mean by that? Okay, so no one goes, well, I shouldn't say no one, and we're in a real estate office too, so I'm sure that you guys have seen this, but not too many people call you, Tisha, and say, hey, I've got $5 million cash and I want to go and buy a house. 2 reasons why a lot of people don't do that. Okay, there are cash buyers and typically they come from different countries, just so you know. Okay, but it's not a good idea to take cash and purchase a home. Okay, because a home is definitely something that for the future can be an asset, but at the same time, everything is about cash flow. So you want to make sure when you're investing that you're doing it properly. And having good credit is a way to be able to own multiple homes and have an investment tool. So that's number one. We're going to talk about hassle-free lending. So I just came from Italy. My husband and I went to Italy for a month. I had been planning this trip for 2 years. Our airfare, all of our hotels, a lot of our events that we went to, guess what? They were all for free. You know why? Because I had been racking up points for the last 2 years so that I could buy my airfare, so that we could buy our hotel, so that we could have all of these things. So it was hassle free. So another thing was, when you have really good credit. So we wanted to have these, they're called air tags. You guys familiar with those? You online? It's where you can track your bags, because right now international flights are losing their bags all the time. And so when you have really good credit, you can get these cool deals. So there was a credit card, an Amazon American Express card, that if you applied for the credit card, you got a $400 gift card. Nice. So I applied for the card and I got approved and I was able to buy my air tags for free. Now I have a credit card that has cash back, has points. I got my air tags. You see where I'm going with this, friends? It's so important to have really good credit because these are the things that you can do with it. Okay. Also, starting a corporation. Okay. If you have a business, you have aspirations to open a business, your personal credit has to be good so that you can build corporate credit. Because what happens for the first 2 years of your business is that they ask you for something called a PG, which means a personal guarantee. And you won't be able to give them a personal guarantee if your personal credit is not in a good place. And then the last thing is, once you own that business and you want to turn around and sell it, your corporate credit has to be in a good place if you want to turn around and sell your business. Because the first thing that an investor is going to do when they do their due diligence is look at how you've treated the finances of that business. And the best way that they can find that information is to look at your business credit and see if you've been recording your yearly minutes, what kind of lines of credit you've had, your UCC filings, which are lines of credit that you've had through the business, and so on and so forth. So those are the things that we're going to talk a little bit about today. The number one thing, now, can you girls see my screen here? Because I know that the people online can see them, but I want you to be able to see this too. So here is what I call the FICO pie chart. Okay. And these are the factors that go into a credit score. Okay. So these are the things when you're thinking about, oh, I really want my credit wellness to be in a good place. These are the things that you think about. Okay. So you see on this side of the screen here for those of you online, and you guys don't judge me on my pinky here. Just so you guys can see, my pinky is missing. I saved my dog from certain destruction. But anyways, so this side over here, the 35% and the 30%, okay, are the most important parts of the FICO pie chart. Now, the reason for that is when we're talking about 30% amount of debt, okay, what it's looking at is your debt to credit ratio. Now, when you're going to get a loan, they're going to look at your debt to income ratio, which is totally different. And the reason why that's different is because when you go and get a loan and they're looking at your debt to income ratio, they're looking at things that are not on your credit report, okay? Like your car insurance, like your DWP bill, you know, how much money you spend in groceries, how much money you spend in gas, things of this nature that are not going to be on your credit report, but is money that's still going out. Okay. So what we're looking at when we're looking at the credit scoring system is your debt to credit ratio. So the debt that you have that's showing on your credit report. So that would be your mortgages, that would be your cars, and that would also be your lines of credit and your credit cards. Okay. Now, the reason why there's a big emphasis on your debt is because potential lenders want to know how you treat your debt. Okay. So there's a couple of things that we got to think about here. It's not just about, oh, I used my credit card and I used it to the max, and that's a bad thing. Well, yeah, it's not great when you're going for a loan, but it doesn't really matter if you're not going for a loan. But the things that matter in the interim are how much you use the credit, and do you ever pay interest to the bank? So a lot of people think that, oh, you know what, I'm going to use my credit card and I'm going to pay it off at the end of the month so that I never have to pay interest. And the thing about that is that that's the wrong thinking. Okay. What you want to do with any credit card that you have is you want to pay interest on that credit card at least once or twice a year. The reason for that is that what are the credit card companies in the business to do? To make money. Now, they do make money off of retailers and through the people that you use your credit card with, okay, because there's fees associated to that. But the risk that they're taking is on who? You, okay? So if you are not benefiting them by at least paying interest once or twice a year, then you are looked at as the risk. Okay, now there's a simple way to handle this so that you make sure that your credit score is always higher and that you're following the rules and you always have a good relationship with the bank. Because a lot of people say, well, how do they know when I use, you know, interest and when I do this or that? And, you know, I don't know if you guys know, but we live in the world of technology and they can see everything nowadays. So what happens and what I tell people to do is one time a year at least with your credit card, when you use it, whatever it is, let's say that you have $1,000 limit credit card and you use $100. When the bill comes in, you pay 80% of the bill and leave 20% so that the following month you pay it off with that 20% that you left over, which maybe is, I don't know, $7.87 in interest, okay, per year. Let's say you're doing it once a year. And now you followed the rule of credit. You have a great relationship with this bank and your credit score, you're going to have a better credit score. It can be anywhere from 25 to 40 points more on your credit score because you're following an algorithm that the scoring system uses. Okay, so the 30% is looking at all of those different factors as they're associated to your debt to credit ratio. Now, clearly, if you pull your credit report and your debt ratio is super high, your credit score is going to be lower. Okay, because what banks and financial institutions want to know is if you're over leveraged. So when you're going to get a loan, when you're going to get a credit card, one of the things you want to do is pay attention and you want to look at your credit before you jump into those transactions and say, where does my debt to credit ratio lie? Because this new application that I'm going to be filling out is going to be looking at that very scenario. Now, the other part of that is, do I have enough debt that I'm utilizing or have access to? Not necessarily that you're using it, but do you have access to it? So that goes into how many credit cards you have or how many loans you have. Now, the national averages, they want to see you have 2 installment loans and 2 revolving. So installment loans, an installment contract means that let's say you're buying a car. And the terms of that buy is that you're buying it, and over 5 years, you're going to make an X amount of payment. And then at the end of the 5 years, you now own the car. Okay. So it's an installment contract. It has a payment, but it has what's called a maturity or an ending date. Okay. That's installment. Same thing with a home, right? Unless you refinance it, when you finance that home, the home has a payment and it has an ending time, and hopefully it's no longer than 30 years. But the point is that it's a contract and it has a maturity time. So that's installment credit. Revolving credit, on the other hand, is something where either you end the relationship or the bank ends the relationship. And the emphasis on your credit score is really heavily reliant on how much revolving credit you have. Believe it or not, that's one of the most important pieces of credit, is having at least 2 credit cards. Now, the reason why you want to have 2 credit cards is, I always make this analogy. Credit is a mathematical equation, okay? And what is math always trying to do? It's trying to balance itself out, right? That's what you do with your checkbook. That's what you do in math. You're always trying to balance things out. So the thing is that you want to make sure that you have 2 credit cards, because if you don't, it's like you're on a seesaw, right? And if you only have 1 credit card, you can't go up and down, right? But when you have 2 credit cards, this one is paid off, and now this one has a balance. This one has a balance. Now this one is paid off. So it's constantly revolving and constantly showing payment history. Okay. And that's super important to this part, or this percentage of the credit score. Does anyone have any questions about this? I know that was a lot of information, but I hope you guys are tracking with me. Okay. So the next thing that we're going to go to is payment history. Now, this can either be a good thing or a bad thing for your credit report, and specifically for your credit score. Okay. So your payment history, if you've made late payments or you've had collections or things of that nature, that 35% can be really negative towards you and your credit history, because it's weighing down your credit score. But this 35% of your payment history also has to do with how good you are, good girl and boy you are at making your payments, and it tracks that information. Okay. So the thing is, what we have to remember is that credit is about relationships. So the longer that you have had a relationship with a bank or a financial institution, the better off your credit score is going to be. So the one thing you never want to do is open and close credit cards all the time. Okay. The longer you have a relationship with a bank or a credit card company, the better off your credit score is going to be. Okay. And I say that you treat it like a relationship because it truly is. I do meetings all the time with investment advisors. And one of the things that they talk to their clients about is, credit cards and interest rates and things of that nature. And the thing is that let's say that you wanted to do a balance transfer with one credit card to another credit card. Well, you don't necessarily have to go to a new bank all the time, because if you have a really good relationship with the bank, you've had a relationship for a very long time, and you've done what I've told you to do, which is using that 80-20 rule, then you can go to your bank and say, hey, I just got this offer in the mail to do a balance transfer for this deal. Is this something that you can do for me? Because I've had a relationship with you for so long. And most of the time, that bank or that financial institution would be happy to do that for you, because they want to maintain their relationship with you. Okay, so that's really important information. Now, the other parts of the FICO pie chart, yes, are very important, but not as important as what I just expressed and explained to you. Okay, Now, the other part, which I just talked about in terms of relationships, is the length of credit history. That's 15% of your credit score. So again, if you're one of these serial open credit cards and close them type people, your credit score is going to be flopping all over the place. Because what a bank or a financial institution, just like the dating app, right? If you see people having, a million different relationships with someone, or on your credit report, you have 17 different jobs and you're going for a job interview, they're going to be like, wow, you move around a lot.
Yeah.
You have to think about it's the same thing with banks and the credit system. And the reason for that is, once again, is that they want to maintain a relationship with you. So even if you're being offered a lower interest rate with another credit card company, go to your bank or your credit card company that you've had a relationship with and ask them, say, hey, they're offering me a better rate. Would you be willing to reduce my rate? And believe it or not, do. Were you going to ask a question?
No, I was just, you said something and I was gonna say, like military wives, they have to move, they don't have a choice, and they get screwed when it comes to jobs and relationships.
But see, that in that particular situation, they have a reason as to why they're doing it.
Employers understand it now more than they used to.
Yeah. So length of credit history is super important. New credit. So just so you know, anytime you get a new loan, a new credit card, a new car, anything like that, it can negatively affect your credit history for up to 60 or 90 days. Now, the reason for that is, again, going back to what I said, the credit system is an algorithm. It's a mathematical algorithm. Okay. So it's kind of like that game Jenga, right? You're putting blocks on top, and then you add something and then the thing crumbles. Yeah. Okay. Because it's mathematics, if you add something to it, it kind of gets mixed up. So what happens is that the ratios have to balance themselves out again. And after 2 billing cycles, they do. So 60 to 90 days, don't be surprised when you go and buy that beautiful new car and you're like, why did my credit score go down 25 points? Well, that's why. It's not because you did something bad. It's just because it's a mathematical equation. So you always have to plan for that. Part of being a good steward over your credit is understanding that you also have to have a plan. What I tell people when I'm coaching them all the time is that if you don't have a plan in anything, then you plan to fail. Okay. It's just like I talk about my diet. Okay. I don't have a plan right now, so I'm failing miserably.
I'm already, unfortunately. We'll get there.
But it's like, yeah. So it's really important, more than anything with your finances, is to make sure that you have a plan. And I tell women specifically that we are very visual people. And I am a very visual person. If you came in my office, you would probably throw up. It's very neatly organized, but I have notes everywhere. And it's because I like to visually remind myself of the goals that I have, of the dreams and the aspirations that I have, but also about the debt that I have, or, the obligations that I have to make sure and take care of. And it helps you make that decision. I read something today and I took a picture of it, and I want to tell you guys, wait, what did that say? It said, as you get older, paid off sounds better than brand new.
Yes, it does.
Yes, okay. It does. And I looked at that and I was like, that is so true. Because when I was young, I wanted everything. And this again is why it's so important to be educated when it comes to finances and credit. Because when I was young, my grandmother was a Holocaust survivor, and Tisha's heard this story before, but she would put her credit cards in a block of ice so that she wouldn't use them.
I said I was gonna do that.
And every time we would go to Sears to get my tough skins right before school started, she would tell me the story. She would take me in the kitchen and she'd take me to the freezer and she'd pull out the credit cards and she'd put them under hot water and she would explain to me, why do we not have these in my purse? And I said, Grandma, because if you have them in your purse, you'll spend the money. And she says, absolutely. Now, my grandmother was a bookkeeper for 52 years. She was the most frugal person I've ever met in my life. She taught me how to balance a checkbook. She taught me how to be frugal. I owe what I do for a living to her because of how she was. But I also understood why she was like that, because everything was stripped from her. Everything was taken from her. As a Holocaust survivor, she lost her parents, she lost everything. And so she learned how to rebuild herself. And she learned also the power of having something. And so when you have something, it's so important to protect it and to make sure that you don't have a lawnmower out and you're bulldozing your own life, you know, when it comes to your finances. So, yeah.
So you mentioned that obviously when you get a new credit card, how long does it take before it hits your credit score?
You mean, so when you get the new credit card, how long will it take to report to your credit report?
Yes,
Usually about 30 days.
because there's certain things that I have done since we talked.
Mhm.
Or I've been looking for a place and they've been running my credit, and obviously I'm thinking like, okay, it's gonna go lower, it's gonna go lower. And then I got a credit card because I'm trying to build my credit. But now I'm like, when is it gonna hit? Like, nothing's changed. and
Mhm.
What's going on?
So you're talking about inquiries.
Yes.
Okay, so the first thing that I would tell you as far as you looking for a place, this is a great topic. And this goes into purchasing a car also, okay? What I tell all of my clients to do is to pull a copy of your own credit report
Mhm.
and take it to wherever you're gonna move to. Now, I know the first thing they're gonna say is we have to pull our own
Yes.
credit report, okay? But what you wanna do is say, listen, I understand, but I'm a single mom. I can't afford for you to be pulling my credit report all the time. And what I would like to do is show you a copy of my credit report and for you to tell me the likelihood of me getting this place. So two things, I don't have to pay you for you to pull a credit report, and you can tell me. Now, if you tell me that everything's going to be good, fine, I'll pay the money for the credit report and the credit check and all of that, and we can go forward. But what I don't want to do is to pay you $125 or whatever the fee is to pull my credit just for you to tell me no. And here's the reason why. You know that's a big scam, right? That there are a lot of property management companies out there that charge a ton of money for applications just so they can turn you down.
Right.
And this is how you will find out if this company is true or not. Okay. Now it's the same thing when you're going to buy a car. The first thing that I do is I go into the finance office and I say, here's a copy of my credit score. Here's a copy of my credit report. Now I know the one that you're going to pull is a little bit different, but what can you do for me predicated on this right here? Okay. So you're in control of what's going on and you're not spending excess money to pull credit reports or wasting your time or theirs, frankly. Okay. So in answer to your question about the credit card, it takes about 30 days to show up. And then remember, once it hits your credit, it's going to make your credit score go down for a short period of time. Okay.
Thank you.
Absolutely.
Isn't it also true, because when I moved, I had this come up. If you have multiple,
Can you speak up so they can hear you too? We're on a Zoom
Sorry.
call.
if you have multiple rental credit pulls in a 30-day period, it only impacts your credit score as if you have one.
That's correct.
Because when I was moving, it, like the guy that I moved into, I was like, are you gonna pull it? Are you gonna pull it? Are you gonna pull it? Yeah, we'll get to it. And then he did like 60 days. And so it impacted and lowered my score even more.
You
because
can
of
get
the
that
score drop.
inquiry removed though. Is that one of your cars, by the way? Okay, does that happen all the time?
No.
Oh, okay.
I don't like, they're probably eating dinner now.
Oh, okay. Okay, so yes, that's called shopping inquiries, okay?
Yeah.
And it now shows on a credit report what you're shopping for, okay? But you can avert that situation by doing what I just told you, okay? So if you were to show someone your credit report ahead of time and go through that process, and then once they say, yes, you know, we want to go ahead and have you as a tenant, and then they pull your credit report and go through that whole process, it would probably be less time. Okay, so moving right along, we're going to talk about the credit agencies. Now, there are actually 4 instead of 3. But the 4th one, we really don't do business with or do anything with, because they're not going to actually come into the fold until next year, potentially in 2024. We're not 100% sure. They were supposed to break into the market in 2020, and then we had the pandemic happen. So the government did not want to further confuse us with a 3rd credit agency. But the thing that you have to remember about these credit reporting agencies is they are all separate entities. Okay, so they have different stockholders, and the only 2 that are privately held are TransUnion and Innovis. Okay, so TransUnion has always been a privately held company. They still are privately held, but Experian and Equifax are publicly traded companies, and they have a lot of rules and regulations that they must live by. Do they do that? No, but that's another story. So the thing you have to remember also is that they're all for-profit businesses. And what do they profit off of is me and you and our information. They sell our information, they trade our information. There's a lot of things that go on what they call the black market, or the black internet, or whatever it is that they call it. And it's really them doing it. It's not, you know, some spy or something like
So
that
I got a message the other day that says, we found your information.
on the dark web.
Yes, so then I freaked out,
Of
and
course.
then I went to my bank and I was like, I need to change my information.
What did they tell you?
They said, okay, and they just changed my account.
Did they tell you not to worry?
No.
So who sent you the dark web thing?
Experience.
They usually do.
So
So
that's why I thought I had fraud on Saturday. Remember, I came in, that's where I just came from, and I was like,
yeah. So
horrible.
the-
Wasted all that.
we have to think about this, okay? What we have to know and understand is that our information is not private anymore.
Mhm.
It hasn't been private for years.
Right.
What's the first thing that happens when you go to the doctor? You go to a new doctor, they ask you for everything. They want to know your firstborn child. They want to know your blood type, all of these things. And where does this information go? It goes into this huge dark web or black hole, or, you know, central database. So it's very, very difficult to protect our information. Okay. The only way that you can protect your information is by keeping track of it. Now, I'm sorry that you got frightened by that. And it's really upsetting that there are what I call trigger words that a lot of banks and financial institutions and all kinds of companies use to make you click buttons.
Mhm.
And typically that's what that's about. Your information going on the dark web, it's already on the dark web. So I don't want you to be frightened about it. There's really nothing to be afraid of. You can lock things. Okay, you can lock your bank account, you can lock your debit card, you can lock your credit cards, you can lock your credit report. Okay, you can, right, you can lock your social security number with the federal government. Absolutely, you can do it with the IRS. You can do all of these things because they have found ways to break into everything. I have for a year now been going back and forth with the EDD because someone made a claim in my name. Now I caught it before they actually got the money, because I have triggers on everything.
Mhm.
But because they're so inundated with this, because during the pandemic, there were millions of cases of people making fraudulent claims for EDD. So they're going to be inundated for the next 5 years handling these cases of people that have had this happen. But luckily, I was able to stop it before it happened, but I still am in the process of fixing that situation.
So did you have your social locked? Is that why you got triggered or?
No,
'Cause I have everything locked and frozen, so.
No, but with the EDD, I
Mhm.
have an email sorter. So anytime I'm an employer, so I keep track of everything. So immediately, once I got notice that there was a claim that was made, because one thing I do is I check every email that I get. I'm very good at only having 2 email accounts. I don't have a lot of email accounts. I don't subscribe to a lot of things because it just fills up your inbox. And if by accident I do subscribe to something, I unsubscribe right away so it keeps my mailboxes clean. Because I get over 100 emails a day that I have to answer. So if I got spam on top of that, I'd be in a lot of trouble.
Right.
So immediately I saw that happened, and I called Bank of America, who actually handles the EDD payment system. They said you have a debit card with them, and they put it on a debit card and you use it. I had a late child. I have an 11-year-old, and that was the last time I had a claim, is when I had him, So as soon as I saw that, I was like, oh yeah, someone thinks they're smart. So I blocked him real quick. I was able to, just because I'm a private investigator myself, I was able to find out the address that they were sending the card to and all these things, and I blocked everything. But it's been a year and I still haven't had the EDD fix the claim.
Well, I keep getting something from Bank of America and EDD that says, from the EDD that says your information has been locked, you need to click on this. And I'm like, I'm not clicking on anything because I don't even know if it's legitimate.
Yeah. Oh, that's a whole nother series. That's a whole nother series, but we should talk about it at some point. But so each agency is on their own. They're all for profit businesses. Okay. And they each have a credit scoring system. Okay. So this is why we have what's called the middle credit score. Okay. Because each agency uses their own algorithm. And it's all based off of these guys who created this mathematical scientific algorithm called Mr. Fair and Mr. Isaac. That's what Fair Isaac stands for, FICO. Okay. So there were these 2 men that created this algorithm that is now used in aerospace. These algorithms are used in so many different things. You have no idea. Credit is just a small piece of the puzzle that they created with these algorithms. But it's important to know that these are the 3 companies that you should be doing business with and should be checking your credit with: Experian, TransUnion, and Equifax. So moving right along, I see we don't have anything in the chat, so that's good. What you also need to remember is that you have what I say is 9 possible credit scores. And let me tell you why. Okay. There's 3 different types of scoring models. All right. So you have consumer, financial, and auto. So the consumer scores are the ones that you get online from all of the different companies. So all 3 credit agencies that are up here on the right-hand corner, these are all the companies that you can get a credit score and a credit report from. Okay. But you have to understand that the credit score that they're giving you is your consumer credit score. All right. And unfortunately, that's good for nothing. No one uses the consumer-based model. Now, it happens to be the fairest model out of all of them. And the reason for that is that they're looking at your credit from when you first opened a credit card and started using credit until today. However, the second model, which is the financial scoring model, is loosely based on the past 4 to 6 years of your history. Okay, now the reason that I think it's fair that banks do that is that a lot of people do have a change in their income every 4 to 6 years. So there's not too many people that have a lot of consistency, although we'd love to see that. You know, either income goes up or it goes down, but things change. So this is why they're more interested in the last 4 to 6 years, and hence why that credit score is always going to be lower. So when you're buying a house or you're getting a credit card or anything like that, and you look on your consumer credit report, because you're looking at Credit Karma or Credit Sesame or Credit Journey or whatever credit system you're looking at online, and you're like, jackpot, my credit score is 780. And then you go to the bank and they say, no, it's not. Your credit score is 720. What are you talking about? You go, oh my God, Angela told me that there's a financial credit scoring system. So you want to make sure that your credit score is always as high as possible. Okay, you want your credit score to be in the 800 category when it comes to your consumer credit score. That way, you know, be somewhere around 760, 740 when a financial company pulls your credit report. And then the third model is auto model, which is loosely based on the amount of automobiles you've either leased or purchased over the life of your credit. Okay, if you've had late payments with an automobile, if you've had possession or charge off or anything negative with an automobile, then chances are your auto score is going to be super low. Okay, if you've had good history with an auto loan or lease, then chances are that your score is going to be very good. If you've had no credit history, you've never bought or leased a car, then that's the one that they call the first time car buyer. And that's not the good program, because you remember what I said last time. You probably don't remember. It's not a good program. Let's just put it to you that way. They really try to screw you over with that program, and they want you to have a co-signer and all of that stuff. So what I tell people that have not ever purchased an automobile or leased one, don't go through a dealership. Go to a credit union. Okay, go to Logic's Federal Credit Union. If you need a good guy, his name is Carlos over in Woodland Hills. He's excellent. He's amazing. And he will get you a really good interest rate on a car loan. And then you have even more negotiating power, because you can go to the car lot and say, hey, I have this cash and I want $2,000 under MSRP. And because you have the cash, you can do that. So these are the 3 scoring models. And these are what you need to know about when you are looking at your credit report. Now, the next thing that I want to talk about before we get ready to close, what time did you want me to stop at? 8? Okay. So monitoring your credit is one of the most important things that you can do for yourself. Okay. This is so that you can ensure that your credit score is always in a good place. You can ensure that no one is using your credit. And a lot of people misunderstand monitoring your credit. It's not just looking for new inquiries or looking for new accounts or things of that nature. You also need to be making sure that the credit cards that you have, the balances on your credit report are actual. Now, here's why I'm saying that. I just had a client call me, a young lady who her mother has dementia, and she has a caretaker. And that caretaker, they found out over the last 8 months, has been using her mother's credit cards. And she would have never known unless she started to monitor her credit report. And so she started looking at her credit report and she was like, I don't understand. She calls me because I've known her for many years. And she says, I don't understand, the amount of money that my mom owes on her credit report. I don't think she owes that much money. So she starts telling me the situation, and I says, does this person have access to your mother's wallet and information? And she didn't know that she did, but her poor mom has got dementia. So if the woman asked her for a credit card, she probably just gave it to her. So now she's over $120,000 in debt, and she can't do anything. She has no recourse, okay, against this person. It's very, very difficult.
Really?
So absolutely. So when you're monitoring your credit, it's not just for those kinds of thieves that are identity theft thieves. These are for thieves that can get your information and use it without you knowing. Okay, yes.
I had a $40 collection show up on my credit report. What the hell do I have a collection for? Well, they were sending a notice to an address I was no longer at for a piece of equipment from the internet company that I didn't even realize that I still had.
Mm-hmm.
And it was like 3 years. And I'm like, I called them, I'm like, what is this all about? And I was like, if I pay this $40, will you just remove this from my credit report? Because I didn't even have any idea I owed it.
Mm-hmm.
And I haven't a clue where this piece of equipment is. And so I paid it and they removed the collection.
That was great.
Very good.
Right? But like 3 years, they were sending notification to an address that I was no longer at.
Yes, and this happens all the time.
And it was,
Okay.
and it popped up on my credit and. I
Yeah, and
checked
you're
it.
lucky that it was with one of the collection agencies that does delete, because most of the collection agencies that collect for cable bills don't delete.
Oh, yeah, I said, I'm not going through you, I'm paying I'm paying whoever it was.
But even
directly.
when you do that, this is a very good example. You got lucky. But most people, what happens is they do go back to the cable company and they pay the cable company. And then you know what the cable company does? They pay their collection agency their portion, and the collection agency reports it as a paid collection. So what you want to do in any type of collection situation is you always want to make sure that you either get it in writing or get on their recorded line that they are going to delete the information from all 3 credit reporting agencies. And it's important that you say that online with these collection agencies.
Yeah.
But just so you know, it's a very good point that you bring up in terms of utility companies. Whenever you move from one place to another, it's very, very important that you tell all your utility companies where you are moving to. Don't just say, oh, what's my ending bill? Because, excuse me, but the schmuck on the other line doesn't know. They don't know that there's going to be another bill that's coming. They just don't know.
Right.
So what happens in your situation is you had already moved and there was an ending bill.
Well, actually, I have a mailbox
Mm-hmm.
and I moved and then I changed the mailbox 6 months later, and this came after that even.
Exactly. Okay.
Even with the mail forwarding and everything, I was like.
Were you monitoring your credit and that's how you find it pop up? Very good. Very good. But point being is, even if, you moved your address or whatever, the most important thing to do is to make sure that you tell them that they were sending the bill to the incorrect address. So you were never notified. In the world of collections, there's something called the FDCPA. Okay. And it's a federal practice about collection agencies, and they have to alert you 30 days before they put it on your credit report. And if you can prove that they've sent the information to the incorrect address, they have to remove it from your credit report if you pay it.
And that's probably what happened. Because
Okay.
this was again 3 years after.
Yeah.
And the mail forwarding was no longer going to.
Right. But the point is what I'm saying is about utility bills. So thank you
Yeah.
for bringing that up. So
But
monitoring your credit is super important.
And that's why I found out, because I was checking my credit pretty regularly and it suddenly showed up and I was like, what the,
Yeah. Bleep. Exactly. So the thing is that, you know, you can monitor your credit through many different sites. There's not just one, there's hundreds of them out there. But, you got to remember that the person that's in charge is not these companies that you pay, it's you. You have to pay attention to what's being reported, or you can end up a victim like my friend that I just told you about with her mother. And how unfortunate is that, that her poor mother, it has dementia, and now they have this humongous amount of debt that was created by someone who was supposed to be caring for her mother. You know, so. I know. It makes me so mad too. So identity theft is the #1 crime in America, you guys. It happens to 1 out of 6 people. Those are really, really, really big numbers. Okay. It happens internally with credit card companies, loss of personal belongings or wallet, internet applications. Make sure that when you are purchasing things online, it says shop safe. You know, a lot of people don't even look at that anymore because we do shopping online so much. I was so interested to see how many places are closing. It was kind of scary. I was in Agora the other day and I was going down that, is it Canwood? I where all of those furniture shops are, you know, off the freeway.
Yeah.
And every single furniture shop is closing. And they're having a liquidation sale. And my husband was like, yeah, no one buys furniture from furniture companies anymore. And I'm like, I do. You know, I don't like to buy furniture on, I don't like to buy clothes online, you know, because I don't know what it's going to feel like or whatever. But the new generation, these young people like you, you know, you guys like to buy stuff online.
Yeah, I like going and stuff.
Oh, okay. Okay. But, so internet applications, so make sure that you're shopping on safe sites, okay? Government institutions, family members, and mail fraud, okay? A lot of people have PO boxes because the chances of your mail getting stolen from a PO box is pretty slim, okay? And then also, if you happen to move around a lot, it's better to have a PO box anyways.
Yeah.
Okay.
Do you recommend, like, for people throwing stuff out, you know, how you get the junk mail? Like, I always get those things for the life insurance because I'm old, but I rip it in half and then dump it. Like, do you shred, like, what do you recommend with that stuff? Shredding?
Definitely shredding. I shred everything.
Yeah.
Yeah, I do. I actually have a shredding company because of the nature of what I do. So I bring my mail in the office all the time and shred it through the shredding machine. But you can buy them for so cheap now, you know, you can get them for $20 on Amazon. It's like, you know, yeah.
The pile next to it's growing.
I don't know who you use, but when I worked at the law firm, we used the shredders and they're very cost effective.
Mhm.
Yeah,
Is that who you use?
I use a company called Shred It.
yeah.
Very similar.
Yeah, and it costs me like, I think it's like $59 every 90 days.
Oh,
you
that's
know.
yeah.
And we don't shred a lot of stuff anymore anyways, because we're paperless. But, you know, before, back in the day, I've been doing this 33 years. I remember when we had 10 shredding bins, you know, in the back mail office because we had so much
Yeah.
mail.
I worked
You
for a
know.
law firm for
It
7 years.
depends on the shred, like on the bin size, because I just had to do it for my company. But the smaller one is like 50 and then the larger one is like 75.
Yeah.
And it depends on the frequency that they come. as well.
Exactly. Absolutely. So these are the steps to take in a breach. A lot of people get notices from companies that they've been breached. And believe it or not, breaches happen every hour, every day. There's hackers out there, you know, you got to understand that the internet is worldwide. So there's information being stolen all the time. Sometimes it's insignificant. And sometimes they're doing it just to have fun, you know, because some of these hackers do it as a game. They don't even want the information.
That just happened last week to Los Angeles Unified and I said
Yeah.
exactly.
Yes, Schoology.
Yeah.
And I
Well,
just,
that's
and I
great.
said that to my daughter.
Uh-huh.
She's like, what? She goes, Mom, why would they do this? I'm like,
Ransom.
some of them, they just do it for the fun.
They do.
But yeah,
Yeah.
My
all-
son thought it was gonna be a lot longer, but no, that was too.
Yeah, that was scary. Like, I couldn't believe, that all of that information, and it sucks because all of the old information is not there anymore. So a lot of these poor teachers, they have to rebuild their Schoology and stuff. Yeah. So, but the point is that these breaches happen all the time, and this is why you've got to monitor your credit. A lot of people freak out about it. They're like, oh my God, my information was stolen. And I'm like, calm down. Your information was already stolen a long time ago. It's out there. You just got to make sure to maintain it.
so I was told the Los Angeles Unified breach was as a result of shareware software. Like, not WeTransfer, which is a one-to-one, but that kind of a software that's a one-to-many, and I can't remember the name of it. So definitely we should be cautious of shareware software.
You mean like big files?
Software that we share files back and forth, that people can put stuff in.
Like Google Drive and stuff like that, Dropbox.
More of the Dropbox and the WeTransfer type stuff.
Yeah, which is crazy because those are touted to be so safe.
Right.
But again, in defense of those companies, they are safer than other things.
Right.
But everybody's exposed these days, I think the internet grew so fast and so wide that I saw a commercial about it the other day, like, how are we going to get control of this? Because talking about privacy and all of that, there is no privacy, it's insane. So those are the steps that you need to take in a breach. What can hurt my credit? We kind of talked about that already. But I always say, like, collections, going over your credit card limit by $1, having too much credit, length of credit history, opening and closing credit cards can be dangerous. Not enough credit or no credit. Okay.
That's what the moral needs to know.
Yeah.
A lot of them are like, well, I don't have any credit cards. I'm like, yeah, but you need to start getting credit.
Absolutely.
That's a big thing.
Yeah. And you have to trust yourself. Okay. Because I have a lot of these conversations with people that are like, no, I'm not going to open credit cards because I'm really bad with them. Well, at some point, it's like I just talked about the diet thing. I have to trust myself that, if there's candy bars, that I just can't have the candy bar, but it's really important because having good credit can save you thousands of dollars a year. So you really have to create a system where you can trust yourself and set up triggers. So one of the things that you can do when you get credit cards is you can set a spending limit. Well, you can set a spending limit too. So let's say you get $1,000 credit card. You can set a $200 spending limit where you start to get a decline on your credit card once you hit that $200.
How do you do it? I didn't know that.
Oh, you can do it with every single credit card. You do it right online. Yeah, right on the portal. Yes. And so,
That's a per transaction.
no. So it's just for your billing cycle. So your billing cycle is, I only want to spend $200. Once I hit that $200, I don't want to be able to spend anymore. So parents do that for their kids all the time, when they share a credit card with them or whatnot. So
That's right.
it's important to do that too. So, but it is very important to build your credit. You can't be afraid to do it. You got to do new things. So 5 habits to raise your credit score: maintain a good credit to debt ratio, which is under 30%. We talked about that in the very beginning. Retain at least 2 traditional revolving credit cards. Now, the reason I say traditional is American Express is not a traditional credit card. All right. American Express is called Sign and Travel. It means that whatever you spend that month, you end up paying at the end of the month. Okay. That's considered an installment credit card more than anything. Utilization factor. Use all open credit cards at least once every 90 days. So you people that have 6 credit cards but only use 2 because you like those 2. You have to remember that when you have a credit card and you're not using it, you are a risk. And so you also are risking having that credit card closed for non-usage. and you're or risking the credit limit to be decreased. Okay, so even if you go and have lunch at, Subway one time every 90 days, you have to show utilization on that credit card if you want to keep it.
So let me ask, if you have credit cards and I guess the amount decreases, that's bad?
That is bad.
Okay.
Yes, well, let's just say it's not good. I don't want to say it's bad, but it changes things, and it's going to alert your other credit card companies that you had a decrease in your spending limit. And credit card companies want to know that, because they're like, why did that happen? Do we need to do the same thing?
So can we actually say, you know what, I don't want that limit, or is it just best to just the limit's there, but don't use it?
Right, don't use it.
Okay.
Put that cap spending
Okay.
limit on it,
Got
so that you don't, so that you don't go over it.
it. Okay.
And then the other thing that you can do is you can put reoccurring expenditures on a credit card. Like you've got to pay your car payment, or you've got to pay your car insurance, or you've got to pay your cell phone bill or your gas bill, or
Okay.
whatever it is. Those are things that you have to pay anyways.
Right.
So why not just have them reoccurring on your credit card, and you're doing two things. You're building your credit and
You're paying.
you're paying your bills.
Mhm.
Okay, and then those are the kinds of things that you pay off at the end of the month. You don't
Right.
let those revolve and collect interest.
Right.
You pay them off. Okay, use the 80-20 rule at least once or twice a year. We talked about that.
Can you repeat how that goes? So you pay, so when because I do everything online.
Speak up so they can hear you.
Okay, so for the 80-20 rule,
Mhm.
I do everything online. So when the date is, like, let's say the date is tomorrow,
Mhm.
I usually pay it before then, like the amount.
Mhm.
So you're saying that amount, just pay 80% of it and let the other 20 like basically roll over, and then
To the next month
pay that 20 and
the
and the
balance.
balance.
Yep. Mhm. And
Um,
you'll see that there's an interest charge there, and
Okay,
you're gonna have to pay that too, but you only have to do that once a year.
okay, okay.
Mhm. And then the last thing is monitoring your credit to ensure that there are no errors. Always monitoring your credit.
So for that 80-20, since I just got the card, I'm
Mhm.
gonna pay off obviously
Mhm.
everything, because I wanna show I'm doing good. And then let's say 2 months from now, 3 months from now, then do the 80-20?
Nope.
Or
Because it's a
opposite.
new credit card, I would tell you for the next 3 months, because you want to
Interest.
escalate the utilization process, do the 80-20 rule for the next 3 months.
Okay, so get the interest, do the payoff, the
80%,
80, and then roll over 20, pay everything off plus the interest
then do it
For-
again.
for the next 3 weeks.
Yep.
Got it.
Mhm. Yeah, because it's gonna escalate your process of building.
Okay,
You see, you're
Right.
gonna show that you're using that utilization
Okay.
system. So, assessing credit, obviously, we talked, you have to have at least 2 credit cards in order to build a credit score. Don't open and close credit cards like we talked about. Revolving credit helps potential lenders see your spending patterns. Okay, and it's gonna take at least 6 months to build your credit. So when you get those new credit cards, remember that it's gonna take that long,
and you said 2 of them,
at least 2.
because you're doing the little.
We'll see. And I have a credit card website that tells everything about the credit card, what you need to know about it. And it's on my website, which is angelabessard.com. So if you are looking to get a credit card, please go on my site, and I get credit for it, just so you know. It tells you all about the credit card too. So it's a good system.
I think for people that have no credit, they're just starting, secured cards are a good way to go and get started.
Mhm.
But my question is, what about like one of the first cards that I got after I cleaned up my secured stuff was one that I paid 79 or well, now it's 99 a year. I haven't wanted to touch it, you know what I mean? Because it's for points for flying and all that other stuff, which I never seem to accumulate enough, but whatever. It's crazy. It's
Well, if
interesting
you
what it
don't
does.
accumulate, you shouldn't keep it then, because it's
Okay.
not, what we always want to make sure of is that our return on investment is there. So you
Right.
just heard me talk about my Italy trip.
Right.
I had an intention, I had a plan.
Yeah.
So me paying $650 a year for my Platinum American Express, it paid off, right?
Yeah.
Okay. Me having my Chase Sapphire card, which costs $150 a year.
Yeah.
So $650 a year for Amex, $150 for Chase Sapphire, and then I have another credit card that I pay, I think $99 a year for. But those were the 3 credit cards that I used to rack up the points,
Yeah.
and I was very intentional
Thanks.
about my spending so that I could get those points. Now, the other thing that you have to remember is that in order to play the system correctly and get those points, you have to pay attention to all of the marketing that comes in. So every company has, what the hell was
What's
that?
That
No, that sounded like, wow. Sorry, guys, it sounded like an accident. So the point system, okay, every credit card comes out with marketing every single month. And they say, if you go to this store, you get triple the points. If you go to this store, you get double the points. And they're things that you buy anyways, most of the time. So I always look at that and I say, oh yeah, I'm going to go here and I'm going to be intentional about buying this or doing that because that's what I have to do anyways. You know, and that's how I racked up those points over a 2-year period, because that trip in totality cost us about $18,000.
Yeah.
But we only ended up spending maybe 3.
From month in Italy. It's crazy.
Yeah.
Wow.
So that's the power of having good credit. And that's the power of following a system. Yes.
So for the credit card that you just said, so it's like, does everybody get approved or what is the?
Which credit card?
You said you had information on a credit card.
Oh, I have a system. Yes. So what it does is it shows you what your credit score needs to be in order to apply for that card.
Got it.
Yeah.
Yeah.
So it tells you ahead of time. So if you're 640 and you go to the one where it says you need to have a 740,
Right.
you know you're not going to get approved.
Cause that means apparently I need to get another one and I didn't go.
I'll send you an email on
Perfect.
2 that you can get.
Thank you.
Yeah. So the last thing is I do a podcast, you guys. My podcast is not for me to be a star or get recognition. It's really for me to give information out to the community and to help people be better stewards over their credit. So if you are in the car a lot or you like listening to podcasts, please check me out. It's on all of the digital platforms. You can catch me. It's called Your Credit Today. And I want to thank everyone for being on the call today. Anyone on the Zoom have any questions that you would like to ask? Please unmute yourself and ask away.
Can you repeat the name of the podcast? And
Yes.
and then also you said you had 5 points for raising your credit. If you could just repeat just the points, I can write them down. I'm sorry, I had 2 of them.
Absolutely. As a matter of fact, this is Ashley? Was that Ashley that was talking?
Yes.
Oh, okay. Ashley, Tisha's actually going to send out the slides for everyone to see, so you'll be able to see that.
Oh, thank you.
What bunny?
No, not you.
Absolutely.
My daughter wants to see the slides too, so she's like, "Let me get my credit."
You
together."
too. Absolutely. 100%. We need you to know all of it so you can take care of mommy.
Yes, yes, that's the goal. And thank you so much. There was a lot of stuff that you shared, not a lot that I knew, but then there was a lot that was nice to know. Okay, some things, hey, you're on the good track, but there's a lot of things that were very informative. So I'll be definitely following your podcast and visiting your website. And thanks for taking time.
Absolutely. Thank you for coming tonight. Anyone else have any questions? All right, well, I think that wraps us up for tonight. Thank you so much for coming to She is Hope. I hope that all of you guys have an amazing rest of your week. Until we see you back here again, I bid you adieu, and I hope you guys have a great night.